The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 27th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off to steve@tfnn.com. Inside that subject heading, please put radio show question. Now, of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We got a bit of a mixed bag out there. The Dow just went slightly negative off a point. S&P's up 16. NASDAQ 100 up 60. Russell's up 5. Tranny's down 57. Semi's up 46. NASDAQ Composite up 70. Gold is up $44. Silver's up 88 cents. Light sweet crude up 20 pennies. Natural gas is back a nickel. Copper is back at 10 cents. 30-year Treasury is off just a bit out there. We've got a number of TD9 counts, as we've discussed before. The VIX index. So let's take a quick peek here at the VIX, see what it's doing. It's going to go ahead and complete a TD9 count pattern today. Give me a moment. Where did I put that darn thing? Here we go. Left-hand side, you're going to see the advanced client oscillator. We'll get back to that in a moment. If you take a look at the spot VIX here, yesterday was bar number 9. Today's the bar following bar number 9. It says you've got a TD9 count bottom. Now, in this case here, what we saw is a price rallied right up to that 50-day exponential moving average. That price right now is at 1927. So know that a key level of resistance has held out there. As long as price remains below the 50-day exponential moving average, the S&P 500 should move sideways to higher. Now, the New York Stock Exchange has an A to B equals CD pattern to the upside that takes it back towards its all-time highs out there. And as long as the spot VIX remains below the 50-day, again, currently 1927, that's a likely outcome. If price closes above 1927, well, then that outcome's going to get short-circuited. Today's price action on New York Stock Exchange, nothing more than pulling back and testing that key level of support. That is that red oscillator and change line. If you take a look at the advanced client oscillator, it is above zero. So those are bullish conditions. So we have bullish conditions both for the advanced client oscillator and for the reading on the spot VIX index out there. If we go take a look at the daily equity future contracts, the S&P 500, ES Mini, traded an A to B equals CD pattern to the upside. Today's pullback, nothing more than a test of the top of its profile out there. No topping signal. Yesterday was a bearish engulfing candle. That's just kind of interesting. The bearish engulfing candle that is more interesting, though, is the one from the NQ. So the NQ yesterday triggers a Gartley sell pattern. What's a Gartley sell pattern? A Gartley sell pattern, if you take a look at H.M. Gartley's book out there, it's basically saying that you're looking to buy that first A to B equals CD pattern in a trend. In this case here, you're looking to sell the first A to B equals CD pattern in a trending market that is to the downside. So if we take and just simply look at the highs out here from February 18th and how we basically had that straight line move to the downside, this qualifies. Now it's a sell the D point top, but also referred to as a Gartley buy pattern. So that's on the negative side. On the bullish side is the fact that price pulled back, and these profiles. They're so beautiful. They're so helpful to you and I. Now, intraday, at least at this stage in time, price pulled back, tested and rejected the center of that bearish structured profile. That's the level where counter trend rallies come to an end. Price is right now back above the top of its profile, which is at 21.47, so remaining above that is a positive, and would suggest that we go back and we now target that bearish engulfing candle out there. That's the NQ. The NQ is the only one that gave us a topping pattern yesterday, or did it? Well, we got bar number 8 inside the Dow Equity Future contract. Today, we will get bar number 9 as long as price closes above the close of bar number 5. That number, 42,319. Now, this TD9 count pattern is likely to confirm today, complete tomorrow out there. So that says the Dow is saying, hey, I may want to pull back to test support. And support here, or at least the first level of support, would be 42,296. Now, if we take a look at the Russell 2000, traded in A to B equals CD pattern to the upside. This profile is pretty much equally balanced. In other words, the center is pretty much in the center. So I can't make that draw that same conclusion with regard to today's pullback in the Russell 2000. But it still has an A to B equals CD pattern to the upside. But here, price is trading with inside its profile. So in order for that to come to fruition, we need to see it close above 21.13. And then finally, is there a finally? Nope. I think we've taken care of everything here. But what we should do is take a quick peek at the intraday charts out there. So let's take a look at those. And let's begin with the NQ. So when we get back to a level of support, which in this case here, we're saying that's that counter trend rally level, the center of that profile, 19,946. If it is a bottom, we ought to see bottoming signals on the intraday chart. Well, take a look at the 10-minute chart here. Forms Rhodes momentum indicator bottom with that bullish piercing candle at 950. Take a look at the 15-minute chart at 10 a.m. Way to get a confirmed Rhodes momentum indicator bottom. Bullish engulfing candle. We get a bull sash candle at 10:30, confirms a Rhodes momentum indicator bottom. And then the 60-minute time frame chart, we had a hammer candle that confirmed at 10 a.m. So if we're questioning whether or not the market is trying, or the NQ that is trying to form a bottom, well, that's a foregone conclusion. And now the question is, well, where's the next resistance level? On that 30-minute time frame, what you can see is that price negated its TD9 count top. That TD9 count top formed at midnight. As the bell was ringing out there, price started to move lower, but then we've got that nice Rhodes momentum indicator bottom, and this suggests that you could see a rally up towards 20,486. But we can find other resistance before we get there. In fact, the other resistance that you and I can find is on the 2-hour time frame chart. Take a look at what it's doing. It's sitting right there at that red oscillator and change line. So the level to be watching is going to be 2162. If we can close above that, that's going to suggest a further rally. 2244 would be some resistance. So there's going to be some resistance. There's going to be some chop. But what I can assist you with is the mere fact that we've got those signals that the NQ is absolutely trying to form a bottom. Will it hold? Only time will tell. Let's take a look at that Russell 2000. We had a request to take a look at that, so why don't we go ahead and fire those charts up there. That request came in from Nicholas, if I'm not mistaken. But let's go ahead and see what the Russell 2000 equity future contract is doing before we go to a breakout here. Let's go see if there's any kind of bottom signals that it generated this morning. And lo and behold, it did. A 60-minute Rhodes momentum indicator bottom. The same for the 30-minute time frame chart. The other charts are still populating out here. You got a nice TD9 count bottom pattern on the 240-minute time frame chart. Russell 2000 likely to head to 2113. Steve Rhodes with TFNN. We come back. We've got some requests for to review some instruments. CLF from Brent to Martinez, California. Robert wants to look at LBS, Walmart, CAVA and Marvel for SAT-P, AMD for Nicholas, AT&T for Jack. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We're going to go out to the West Coast, so to speak. Brent in Martinez, California, wants to take a look at Cleveland Cliffs out here. He's looking for a bottom pattern out there, and I think you're going to get it. It's the 9s, Brent. If you take a look at the monthly time frame chart out there, now first, the very key price point is going to be $8.99. Now that's not going to be a level that's important today, but an important level tomorrow. And the reason is because the weekly time frame chart has a TD9 count top, TD9 count bottom. My apology. That formed back here on January 3rd. Now, the volume for that week was 59 million shares, but, kind of a holiday weekend. It's been tested, that level, with 144 million shares. That's too much. Been tested with 92 million shares. Still too much. This week, 63 million shares. So you got 63 million shares so far, testing 67 on an average day. I don't know if yesterday was an average day. It did 17 million the day before. 18 million. So you might still have volume coming into that swing point test. But nonetheless, as long as price closes above $8.99, remains above $8.99 on a weekly basis, the TD9 count bottom is present. If we look at the monthly time frame, TD9 count bottom is present. It's the same figure, $8.99. So that is a key level, I believe, intermediate and long term, that you're looking for price to hold. If we take a look at the daily time frame, well, today's going to become bar number 8 of a TD9 count. That says, in order for a TD9 count bottom pattern to form for its daily time frame, tomorrow price must close below $9.29. So you're not looking for much of a rally in Cleveland Cliffs today and or tomorrow. Well, today, actually, hold on. Today, price has to, so you're looking for Cleveland Cliffs to pull back today. Cleveland Cliffs needs to close, I take that back. Today, price just needs to close below $9.42. So it should be able to do that. It's tomorrow's close that's going to be the key one, and that is you need to close below $9.18 in order to trigger a TD9 count bottom pattern out there. So that's what I see when I take a look at Cleveland Cliffs. Brent, I hope that helps you out. Always good to hear from you. Thanks so much for waking up early to join the Trader's Edge show. Robert wants to take a look at LVS. So, and what Robert is looking for is a very short-term trade. He said he just wants to go out on a date. He doesn't want to get married to it. So let's go take a look at LBS, and let's take a look at some intraday charts out there. And on the intraday charts, first, let's understand what's going on in the daily time frame. And you might want to get married for more than just a couple of days. Date her for more than a couple of days. LVS, that is. It looks like you're going to get on a daily basis a Rhodes momentum indicator bottom pattern. Now, yesterday's candle was a doji, so it becomes very easy to get a bullish engulfing candle. But that doesn't matter. Nonetheless, you've got a bottom signal on the daily time frame. The 195-minute chart has a TD9 count bottom pattern. It's going to try to rally up towards 4103. That's the first resistance point for that time frame. The daily is going to be 4154. But price may be able to take that out. If we look at the other intraday charts out there, I see a bottom pattern on the 65-minute, on the 30-minute time frame chart, on the 15-minute time frame chart. Now, where LBS is a little bit weak is on the weekly time frame. Price is trading below profile support. This would be the second week below that level, and that's suggesting it wants to make a run for this swing point, which it's testing. So let's test the weekly swing point. So far, the high, we're looking at the swing point from August 9th. That high would be $40.23. And the volume is 33 million shares. Well, let's see what kind of volume we've got this week. This week so far, we are at 18 million shares. So what you'd really love, you want to see price on Friday, tomorrow, close above 40.23. If you do that, then what you've got is a test and rejection of a weekly swing point on lighter volume. So you're looking for a short-term trade. Maybe this is a little bit longer than that. From an intraday standpoint, you're chasing just a little bit here. But now's the time to fire away, Robert, for that trade on LBS. You'd like to do the same thing for Walmart. So let's take a look at Walmart. It's going to take a moment to get these charts here to populate. But populate they will. And then we'll see if we can find something similar out there. But you asked for two. Maybe at least if we've got one, then we're in good shape out there. Now, we take a look at the weekly chart for Walmart. It's awful because it's trading below profile support and is really suggesting to you and I that it wants to make its way to 79.76. And as long as that monthly time frame remains below its oscillator and change line, the oscillator and change line right now for the monthly time frame is at 86.42. If it closes a month below that, it's signaling to us caution, Will Robinson. Now, the daily's got a TD9 count bottom pattern. That formed way back in the middle of March the 13th. Hasn't really done much, right? And we're testing that swing point as we speak right now. So the top of the swing point, that candle session again from March the 13th, volume there 31 million shares. Yesterday, we came down with 27 million shares. The day before, we came down with 27 million shares. Today, so far, 2 hours of trading, 5 million shares. So that's a 15-type million share day, 15, 16, 17. So what you'd love to see this do is just simply continue to remain above 85.85. And on a daily time frame, you'll have a test and rejection of a swing point. But Walmart just hasn't really had much oomph and action to the upside. And we look at those intraday charts, not as many bottoming signals as we saw when we took a look at LVS, that Las Vegas Sands, or I don't remember what LVS is, might be. So I'd say the LVS trade looks better than the Walmart trade does at this moment in time. So, Robert, I hope that helps you out. As always, thanks so much for your request. Sat P wrote in and wants to take a look at, is wondering, where is resistance for Kava? CAVA is the ticker symbol. So let's go answer that question. Let's answer it now. What I don't know is what time frame. So first, with regard to Kava. Kava is trading above the top of its daily profile. So that was resistance. That now becomes support. That's at 88.43. Where's the next level of resistance on the daily time frame? I wish I could find one for you. I can't. Oh, no, I can. I most certainly can. It's all the way up. Here's the TD9 count. It's all the way. I just got one bar turned on. It's all the way up here at 132.47. That's the daily time frame. The weekly time frame has resistance at 109.90. That would be its oscillator and change line. What that means is if price rallies, that number is going to change. It's going to change no matter what. But I'm just giving you a basic general price target out there. Now, what the weekly chart needs is a bullish reversal candle to confirm a bottom. However, we closed above. Last week, we closed above the prior week's high. This week, we're trading above this week's high out there. Well, that's a signal of a rally, most certainly. And on a monthly time frame, Kava pulls back. It has a TD9 count top, pulls back this month, tests its buy zone between 76.78 and 87.41 out there. So you're looking for resistance. The closest resistance level that we've really got is in that 109.90-ish area. So Sad, I hope that helps out with regard to that. You also wanted to take a look at Marvell. MRVL is a ticker symbol. Here you're looking for an entry point. Now, on the monthly time frame, the Rhodes Momentum Indicator top suggests that we get back to test support. That's at 60.62 out there. The weekly time frame is going to form bar number 9 tomorrow. However, it's not a TD9 count bottom, not just yet. And the reason is because bar number 7 is the low of that session. So perhaps what we're going to get out here is next week is when the weekly would go ahead and at least poke below the low from March the 14th, the week of March 14th. It just needs a one tick below 63.65 to trigger that TD9 count bottom pattern for next week. The reason why that might happen is because we're trading below daily profile support in Marvell as we speak right now. So Stevie's going to say, hold your horses, guys and gals. And let's come back and let's take a look at Marvell on Monday, Tuesday. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dan in New York City wants to go long wheat. The ticker symbol WEAT. That's the Tecrium ETF. I think that is a triple out there. Now, the important thing to understand about any ETF is what are the underlying instruments. At least what make up maybe the top 10 or something like that. But in this case here, that's not what we're dealing with. We're dealing with several different wheat contracts. So, for example, and you can look this up, and I don't know the exact percentages. I believe they're all about 35%, give or take. So it's somewhat equally balanced. But the WEAT ETF is made up of the July 2025 contract, the September 2025 contract, and the December 2025 contract. Now, the question is, do we have buy signals out here? Well, those buy signals may go away today or tomorrow. And what I'm referring to is we might be getting an A to B equals CD pattern to the downside for wheat. So the entry into wheat could be a ways away, but we won't know until we see how this plays out. Now, what I'm referring to is you can see TD9 count bottom patterns, really for all four instruments out there. The ones that I'm referring to are the ones that took place on March the 4th out there. But price is trading below the bottom of the bullish structured profile for July, below the bottom of the profile for September, below the bottom of the daily profile for December out there. And they're trading below red oscillator and change lines. And that's a signal that price certainly is going to test those lows, but it may take those lows out, Dan. And if it does, as an example, if we open up the July wheat contract out there, you're going to get a big A to B equals CD pattern to the downside out here. Now, I can also see that price is testing other areas of potential support. We're actually trading below those areas from back in December of 2024. Again, another caution sign there. So I don't see it today. Let's see if price tests and rejects these TD9 count bottoms. Does price get back inside the profile out there? But right now, Stevie's got to say, hold your horses when it comes to going long. WEAT. So I hope that helps you out. I'm going to go ahead and close out this set of charts out there. That's going to take us back to the main screen out here. And now what I'm going to go do is try to figure out where I left off, which was Nicholas is asking about AMD. So here's a guess. Is that AMD? It is. Lovely. So AMD, and Nicholas, I apologize. I forgot to write down what it was that you were requesting. I think you're looking to take a long position. I don't recall. But if you were, well, that's the wrong time as right now. Why? Because you confirmed a TD9 count top yesterday. You're completing that pattern today. Typically, when you form a TD9 count top, price will get back to its oscillator and change line. That's exactly what it's attempting to do. It has a profile that is a bullish structured profile. So the buy zone or potential buy zone for AMD is between 103.35 and 104.75, and the oscillator and change line is wedged right inside there. So that's where price is headed to, at least on the daily time frame. And that may turn out to be the C point of an A to B equals CD pattern to the upside. Steve-O, how in the heck can you say that? You know, that's a great question. I'll tell you how I can say it, because I just did. No, the reason I can say that is if you look at the monthly time frame chart, you've got a nice TD9 count bottom. The issue with the monthly chart is price is trying to get back inside its profile. To accomplish that task, come next Monday, price needs to close above 106.54 or 106.19. So you'd love to see it at least do that out there, which is get back inside its profile. On a weekly time frame, this week completes a TD9 count bottom pattern. That formed a couple of weeks ago on bar number 8. Now, what we saw here is prices trading with inside a profile. It's fairly balanced. Support is down at 105.01. The center, 112.73. And the top at 120.44, with 125.65 being TD9 count breakdown resistance. So that's your overhead battles that you're going to deal with here. So I would be patient on AMD. Let's take a look at it tomorrow. Monday might even be better, but tomorrow or Monday, you got to remind me, got to send in a request, if you will, because then we'll start taking a look at the intraday charts. But it looks to me like, because this is, now, and the reason also even consider it today is today would be bar number 2 of a pullback out there. And oftentimes, that's what we get as our knee-jerk reaction. In this case here, knee-jerk reaction. Low is just the normal cadence. of the marketplace out there, so maybe getting close. You like the weekly, you like the monthly, we like the daily, except that TD9 count top, but now we want to see is if it can hold support. So we'd really like to see it test that buy zone, if you will. So, Nicholas, I hope that helps you out. Jack is looking for some upside targets for AT&T out there, so let's go take a look at it. With regard to targets, well, I don't know if you want to look for upside targets. Today's going to be bar number 9 of a TD9 count. That kind of says the upside target is today's high or tomorrow's high, and that we should expect or anticipate a retracement out there. The weekly time frame chart is jumping in on the game too, and it's going to go ahead and form a TD9 count top tomorrow. It'll complete that pattern next week out there. We are trading above resistance on the daily, on the weekly, and on the monthly, so I don't really have you were asking for an upside target. I'm sort of suggesting that upside target is really here today or tomorrow is most likely the outcome. Now, there's a possibility on the monthly time frame chart we're also in bar number 8, right? But the patterns can fail. So what you're really watching for here, Jack, is you're waiting to see the conclusion of tomorrow. Whatever that high is, if price starts closing above that, tells you about a strong upward momentum move. At least it tells you that on the weekly time frame that it's not this week that's the high. It might be next Friday that's the high out there. With regard to any patterns, if you look at the monthly time frame chart, there's not really an A to B equals CD pattern that is present out there. The only one that I can see, it's like it's already above the 1 to 2 level, that's for sure, because the one that I can see out here, you don't want to force these. If it doesn't exist, it doesn't exist. But that would be the A to B point as an example, and we can see that, the from the C point, we're more than twice that level price out there. So this is like a 1 point. So I can't give you really a good price projection there. Let's just do this. Let's just stay with the fact that Jack, that this is getting ready to form at least a short-term top, possibly an intermediate-term top, and maybe even a longer-term top. So that's what I can provide to you for AT&T. I do hope that helps you out. Dude would like to take a look at ticker symbol HG. HG right now trading at 21.41. It has a Rhodes Momentum Indicator top. It formed that pattern both yesterday and the day before, so it's certainly telling us that it's trying to form a top. Now, the reason why I say wait, Steve, didn't you just say it formed a top? And then you say it's trying to form a top? You're confusing me. Well, the reason I'm confusing you is, yes, it has a topping pattern, but price remains above resistance. And that would be the profile at 21.14 and its oscillator and change line, which is green at 21.19. So it does have a top, but Stevie's going to go with a neutral signal out there. If you look at the weekly time frame chart, no topping pattern whatsoever. So that suggests that it wants a further rally. There's an A to B equals CD pattern to the upside. Let's see if this confirmed it with volume. The volume was 4 million shares, passed with 4.1 million shares. So even on a weekly basis, you've got an A to B equals CD pattern to the upside for HG. Steve Rhodes with TFNN. We get back, we'll finish looking at this chart, then EXK, IBRX, and any other requests that have come in. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're back to HG out here. It's got that daily top out there, and if price is able to close above yesterday's high, then it'll be on its merry way, so to speak, and that would be 2168. The reason why I have to say so to speak is because if we start ticking above that, you're going to get bar number 8. There's a potential for TD9 count. So right now, HG is in a caution mode for its daily time frame, not for the monthly, not for the weekly chart out there. So that's what you're dealing with there, dude. You also wanted to take a look at ticker symbol EXK. So let's go ahead and see what that's got in store for us. EXK is consolidating with inside its daily profile. It's done that after forming a TD9 count top made about a week and a half ago. Profile support is at 447. Profile resistance up at $5 even Steven. So you get a top, prices pull back to support, and it has held support. Could be a bottom. If you look at the weekly time frame chart, got a nice TD9 count top many months ago, took price right up to its breakdown level of support at 504. So we're trading above profile resistance at 434. It's also above oscillator and change line for its weekly time frame. That's your support level. Resistance is 504. No idea which one is going to win out there, but the monthly time frame chart suggests that we're done going to the downside as long as price remains above 436. That's a TD9 count breakdown level for it. So it's back to the daily time frame. And on the daily time frame, what you're looking for here is for price to get above that green oscillator and change line at 466. Now, doing that would switch this back more towards a bullish message for the daily time frame. Doesn't mean it's out of the woods. The woods, where the wood choppers are, is at 473 and $5. Those are the center and top of the profiles for the daily time frame. So, dude, that's what we've got when we take a look at EXK. Hope that helps you out. Now, not a surprise that this might rally for a day or two. We had 5 consecutive moves to the downside out there. That was EXK. Dan wants to take a look at ticker symbol IBRX. IBRX right now is trading out at $3.04, having a very nice move today. So what do we see here? when we pull back the curtain on the daily time frame chart, what we can see is prices trade above the top of its daily profile. That's at $2.89. Two closes above that will give us a profile change in trend. I don't even need to go look to see if there's some kind of daily bottoming pattern out there. So what you're watching for here, Dan, today and tomorrow is 289. On a weekly time frame chart, we have a buy the D point bottom pattern, a wave number 7 pattern out there. Price trading with inside its profile. Price having tested the bottom of its profile last weekend, this weekend holding, and now we're trading above the center. The next battle is going to be at $3.30. If price can clear $3.30, then you're on your way to probably test the high from the trading week of February 21st in about the 427 level. If it can clear 427, then the next real battle inside of IBRX becomes between 503 and 581, and that is the center and top of its bearish structured monthly profile. So you like today's action, you stay above 289 today and tomorrow, you're likely to rally to 330, you get above 330, you get to that swing point, and then above that, you're going to deal with 503 to 581. So Dan, I hope that helps you out. And as always, thanks for your request. White Shark inside the Tiger's Den is interested to see if WOLF, the Wolfie one, has bottomed. Now, Stevie's saying you got to be careful with his chart. Does it have a daily TD9 count bottom? Absolutely. Does it have a weekly Rhodes Momentum Indicator bottom? Absolutely. Does it have a monthly TD9 count bottom pattern? Absolutely. Steve-o, what's the caution here? Well, that monthly chart, that oscillator and change line, that's worth all the money in the world when it comes to Wolfie. Take a look at that. Price has been below that oscillator and change line ever since September of 2022. I think we're in 2025 right now. So you really, if you're day trading it, that's a different thing out there. But you really, I believe, as you wrote in or what have you, that really you're looking more for a longer term bottom. The signals are there. Now you need price to cooperate. And what does that need? That needs a monthly close above that oscillator and change line. What's that oscillator and change line printed at? 591 as we speak right now. What do we trade at? 593. Does it matter today? No. I think it's going to matter on Monday out there. And you'd really like to see it close above it by more than 1 penny out there. So I'm going to suggest that this has got bottoming potential. Absolutely. But it's got to be able to clear that red oscillator and change line, and especially so because we're trading below the bottom of its monthly profile out there. So that's what we see, White Shark, when we take a look at WOLF. Hope that helps you out. Kevin writes in, and his question, good question, is the question is, where did Stevie put this? I did put it here. His question is basically, do I see any kind of a bottom in the U.S. dollar index, and will the U.S. will that then to lead to a rally with then maybe impacting commodities out there? So now what I can't do, because I don't have the data feed turned on, I can't just turn that data feed turned on that easily without, I got to shut down a bunch of windows out there. And so I don't have the live U.S. dollar index. Here's what I can share with you is prices trading with inside its daily profile or found resistance there late last night. 104.20 is the number out there. So you've got a no bottoming pattern on the daily time frame. But if price can close above profile resistance at 104.20, do it for 2 consecutive sessions, Kevin, then the answer would be yes, you'd have a profile change of trend, and you move up to 106.20. Now, the weekly time frame chart is going to go ahead and complete a TD9 count bottom this week. I'm going to go ahead and put up the continuous contract, even though, again, I'm not going to get into live data out here, but will be more. It'll be much clearer and take a look at the weekly time frame chart so that you can see that TD9 count bottom pattern. And I believe that this TD9 count bottom pattern is going to go ahead and complete tomorrow out there. So the weekly is definitely giving us a signal. Again, I've switched to the continuous contract, so ignore the profiles out there. But yeah, you can see you've got that nice TD9 count bottom, and price should rally up towards the oscillator and change line at 106.07. Now, what impact is that going to have on commodities? Well, the U.S. dollar index, for the most part, has been moving higher. So has gold, if that was one of the commodities that you're looking at, or were you looking at soft commodities out there? So again, the correlation that's out there, the correlation tool I have is on my e-signal chart, so I can't really do that. But to answer your specific question, out here with regard to the U.S. dollar index, it's got that weekly TD9 count bottom, and that says pay attention. So, yeah, you could absolutely get a rally out there. What impact it has, that I'm uncertain of. So I hope that helps you out, and thanks for taking the time to write in. Just checking to see if I've got any other requests. I'm telling you, it's like my phone listens to me, right? I say something about the U.S. dollar, and then the next email I get is a U.S. dollar email. Crazy. Okay, so no other requests that I see. If I have overlooked something inside the Tiger's Den, which is a possibility, would you be kind enough to let me know and just retype it in? And my apologies, because I just don't I don't want to spend too much time looking at it. But instead, until that happens, let's go surf around. Let's go see what's going on intraday here. Let's take a look at the ES Mini. It should pop up right now. So what do we have here? So much like the NQ and the Russell 2000, we got a number of intraday bottoms out there. So you got two hammer candles, both on the 30-minute and the 60-minute time frame chart. So the key number to the downside out here for the ES Mini is going to be 57.20. Now, why is it trading lower? Well, if we take a look at the 10-minute time frame chart, what we're going to see out here is a TD9 count top that drove things. So it completes a TD9 count top, forms that top at 11.20, completes at 11.30. It's now 11.50. We're trading below profile support out here. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Just to follow back up on the ES Mini, it formed those nice bottom signals earlier this morning about 10 o'clock. Then we get that 10-minute TD9 count top. My only concern there is that the ES Mini might be pulling back to the 57.35-ish range out there. If I look at the 120-minute time frame chart, today's rally found resistance at that red oscillator and change line, so that's got 57.40 for support. The 4-hour time frame chart's got 57.40 for support. Same thing with the 5-hour chart. We're trading on the 50-minute chart below. It's got profile support at 57.37. So it's just looking like this still might want to pull back a bit further out there. But I will say I don't have real good, clear signals on the ES Mini out there. Sometimes you just don't have clear signals. Let's see if we got any clear signals on ALLR. That is for Dan inside the Tiger's Den, and that wasn't it. Shoot. Stevie was going to be nice and smooth, and turns out it wasn't. So ALLR right now, Dan, it's dealing with profile resistance on the daily time frame. That's up at $1.15. So if you close them above $1.50, and I can't really make heads or tails of the weekly or monthly time frame chart. So you're really looking for ALLR to be able to close above the top of its profile. If it can do that, then the next thing you're looking for is, can it close above the swing point for March 10th? And that's at $1.24. Volume there was 5 million shares. If you close above that, then you get an A to B equals CD pattern to the upside out there. So that's what's going on with regard to ALLR. Again, trading right now into resistance. And then Dude wanted to take a look at BZLA. So let's pull that up out here. And BZLA, it looks like it's going to negate a monthly TD9 count top out here and trade above its profile and screen oscillator and change line. Looks like it'll do that on Monday. So that is suggesting longer term it wants to move higher, but it does have that wave 7G top out there. On a weekly time frame, what you need to see is, last week price formed a Rhodes momentum indicator top. So the only way that gets negated is a close above 247. But here price is trading above profile resistance and the green oscillator and change line. So the monthly is at neutral. So you got double tops out here. And you've got to close above last week's high in order for this thing to get bullish again. Hey, folks, stay tuned for all the great programming. I'll be back with you tomorrow on Fabulous and Fantastic Friday. Have a terrific Thursday. Take care. Be safe.